So in the insurance business, you experience this. I mean, someone at some point said, "What do we pay you for?" Like, this just goes up every year. Like, it's a pain in the butt. Like, right? I mean, and this is something we could directly have a fee for service deal that wasn't tied to an insurance company. So, the last 4 or 5 years, up until a year or so ago, we continue to get new insurance clients. But I spent the bulk of my time building up this risk management side. I kind of had this plan. I'm still only 40 years old. I'm still the young guy, but I've been around a while. And there's still a lot of old relationships that a business that I want on the insurance side. But we have built something that's unique. And we're working with a lot of people that we don't write the insurance for yet. They still have a relationship. They still have a best friend that does it, and I want to respect that, and that's okay. I think when I rewind the clock 10 years, I didn't respect the relationship as much, but now I'm making the relationship about business. So we're starting to circle back around and say, okay, let's look at all the money you spent, because now my experience has been our clients, and we love them, but they'll come at me on contract prices, right? They'll be like, "That's too much money. Like, what are you talking about?" Well, let me show you how much money you spend on your insurance and on your commissions. And when I break down, like a paycheck, so taxes, we've all had paychecks before. You go in your own business now, but we've all had paychecks, right? Here's the top line, and here's all these little things that come out of it, right? And so I call it the anatomy of a dollar. So I started breaking the dollar down that they spent. How much does the logo get? I call the logo. If there's a $10,000 commission out there to an insurance agency, you're not paying the agent. The insurance company's paying the agency, then the agency's paying the agent. Then this is how that flows. And when you turn it back around and you see where all that money is, then you can make a more educated decision. Because it used to be, I believe that if you rewind the clock back, there wasn't a whole lot of difference between insurance agencies, and there didn't really need to be. I think the environment was different. Pre-ACA and benefits, right? It was pretty consistent pricing. Because, I had 3 or 4 years in before ACA kicked and everything went like, and it wasn't that big of a deal, right? It became a bigger deal, and everybody views insurance agencies as all selling the same product, similar to a car lot. An F-150 is an F-150. Well, my workers' comp is my workers' comp, right? No, that's not the case. There's a lot to it. So building that risk management team around having the expertise in insurance, plus being able to help your employees be safe and do the right things and protect you on the back end from a lawsuit. If someone gets hurt really bad and you get sued, but you didn't train them, your safety manual wasn't explained to them, you're in big trouble. But we can control all the things we can control: safety manual, training, all these different type of things we do for our clients to make sure if and when they need their insurance, it is used for the financial tool that it is. Because that's what insurance is. It's a financial tool if and when something really bad happens, right? And does that insurance company like you after they have to spend their money on you? No, they do not. So we want to make sure that if we're making money from all this product, we're providing a service back that helps eliminate that from happening. Or if it does happen, we attack it really aggressively and keep the costs of claims down, because you're always going to pay back your cost of claims, right? It's always going to come back down the road. So that's kind of a long-winded roundabout way, but we kind of stumbled onto it as we went.